The system plays a very critical role in what we call that getting the savings from the savers and giving the money to the people who will invest. And the stability, overall stability of the financial system, that is of very critical importance. Now, the issue around whether banks are lending or not lending. So, this is a fact that the credit growth this year has been lower than the corresponding period of the previous year. Now, is it a supply side issue, or is it a demand side issue, or it could be a function of both? So definitely the banks, uh, in terms of the demand and particularly on the project side, if you look at any statistics, the investment in the economy has come down. And if the capex is not happening, the investment in the economy is not happening at the same pace, then obviously this is a demand issue. And the risk aversion would be where there is a demand and banks are not lending. The other thing is, which I have been saying at several forums, that for us to give debt, we need equity. Is this not a fact that the number of people or business houses who have the capability to invest, that has shrunk? And in such circumstances, definitely we need to create more businesses, more entrepreneurs, who have the capability to invest and who have the capability to borrow. If people are sort of benchmarking that what happened after 2008, where there was a lot of money supplied by the banks and there was dilution of some of the credit underwriting standards. And then banking system and the country paid a heavy price. So if we are benchmarking against that and want a repeat of that, that is not going to happen this time. So banks, in my view, they are being prudent. The credit growth, when we look at the numbers, even when we look at the comparisons that private sector banks are growing more than the public sector banks, but that also is not leading to the higher credit growth for the entire system. Only some refinancing are happening and some shift for various reasons from the public sector banks to the private sector. Then we had the shadow banking crisis, ILFS, Diwan housing. So in such a scenario, one is that the stability of the financial system, for sure, creation of investment demand, that is another thing, availability of equity, third thing, and I think banking system itself has created capabilities to lend and they will be able to lend.
In fact, we've seen a lot of the financial services firms, Mr. Kumar, go in for COVID proofing. They've raised equity, they've gone in for fundraise, but it's fascinating that neither SBI, neither Bajaj Finance, Finserv had to go in for it. You've, of course, both done large fundraisers running into COVID-19. So I think you were well capitalized on that front. Mr. Sanjiv Bajaj, if I can now come to you. You had... Sorry?
So three people, HDFC Bank, Bajaj Finance and the State Bank of India. We have not rushed into raising the capital.
You've not rushed, but now that you're seeing what's happening in the equity markets, I don't know if you're going to keep that option open. Both your good friend, Mr. Uday Kota, keeps talking about the need for all of you to go in and raise more equity. Mr. Sanjiv Bajaj, if I can now come to you. We've seen what Sanjiv Mehta has said. You've heard what Mr. Rajnish Kumar had to say. I want to get your perspective. The largest NBFC. What are you seeing as far as demand goes? Your customer is also different from the SBI clientele.
Nayantara, our customers primarily are individual consumers and small and medium businesses, both in urban and in rural India. After the first 6 weeks or so of the lockdown, rural India opened up pretty strongly for multiple reasons. Harvesting was good, rains was good, which gave good confidence. The pandemic effects had not reached rural India, and we saw good growth numbers coming from there. As far as urban India is concerned, the lockdown impact started wearing off, I would say, from the second half of May. And June and July, I would say part of July, we started seeing good growth numbers even in urban India. However, as we know, from July till literally middle of August, or maybe even end of August, we have seen random local lockdowns. And Sanjeev talked about how this disturbs supply chains. So we've seen significant disruption of the supply chains, which means unavailability of goods even when people want to buy them. Plus, jobs get compromised, confidence drops, and as a result of which, consumption drops. So that has been unfortunate, and that's why I'm happy to see that the last reopening order that came from MHA, I think 2 weeks ago, had a sentence which told states not to unilaterally lock down parts of the state. And I hope that this is something where the center and the states can work together, because it is impacting the entire economy. Again, the last few weeks, things are looking like they are improving. Unfortunately, the pandemic is spreading, so it's there all around us. And I think it's our duty as citizens to practice all the safe distancing, hygiene, so that we can keep the economy running. We are fortunate that fertility levels are low in India. We don't know why, but that's the benefit to us. I think we should leverage that, keep the safety, and keep the economy humming. That's important. So, as long as supply chains stay open, as long as local lockdowns don't happen, and those won't happen if we all individually behave in a responsible manner, we should see this economy coming back.
Mr. Bajaj, has that started to happen? We're also talking at a time when Shraddh has come to a close. During the pandemic, or should I say during the lockdown, your customer acquisition, the quarterly run rate, for example, had dropped to what, about 0.5 million, down from the 2 to 2.5 million customer acquisitions you were undertaking quarterly. Has that started going up?
It has started improving, but the drop was for two reasons. One, there was less customers that were coming to buy things. But the second was also, as we were on one hand staying open for business, but we also had to manage our risk. So we were doing more with existing customers rather than actively pursuing new customers, which we would in better times. So there were both those reasons why you saw acquisition of new customers coming down. It is gradually improving, but as I
Okay.
said, this is not a instant in time. We still have at least another 2 quarters, if not 3 or 4 quarters ahead before things start normalizing, and hence
2 to 4 quarters more to normalize.
2 quarters at least, 2 quarters at least, and maybe even more. Because let's be clear, this is the first time we are seeing a virus having such an impact in 100 years. We can all guess how long it's going to take for this to recover, but we don't know. So we have to be prepared. So being hopeful is one thing. Being prepared for tougher times is something equally important for businesses to do, to make sure
Correct.
that we get out of these times, if not stronger, but at least more resilient. So my hope is that going forwards, we continue to see some restraint on local lockdowns. We continue to see better
Yeah.
day-to-day sense prevail amongst citizens so that we can keep the economy going.
Mr. Sanjiv Mehta, if I can now come to you. Mr. Bajaj is, of course, of the view that things will only normalize minimum 2 quarters. We're still in the survival stage. It means then we have to go to revive, then we have to go through thrive. So, given the stage that we are also in, if there is one silver lining, and we must also talk about it, at least the rain gods are smiling. The monsoon is good news that is coming in for the rural economy for Bharat. Mr. Mehta, 40% of your revenues come from rural India. I think the comparison between urban and rural, we must talk about it. Are you seeing a dichotomy between urban India and rural India? A lot of you will also be, I would imagine, adopting a bottom-up approach as you move from the survive to revive to thrive stages.
Absolutely. Yeah, as Sanjeev rightly said, that one is, if you look at it, the severity of the lockdown, which was faced by urban India, did not percolate down to the same level in rural India. Second is the harvest has been good. And then the government also has done a very sensible thing in terms of ensuring that the Manrega outlay goes up. The per day Manrega payments have gone up, and also ensuring that food grains are distributed free and the direct transfer of money, which has definitely given a boost to the rural consumption. If I may just pause and reflect that before COVID happened, the rural consumption had slowed down. Yeah, and the rural per capita consumption of FMCG is less than half the national average. So the runway to grow in rural India is massive. And if things are good, then the rural growth rate is anywhere between 1.5 to 1.75x the urban growth rate. Yeah, so it is very visible now that the rural growth rates are higher. But I think the issue for us now is the urban growth rate.
Yeah.
And when it comes to FMCG, there are two important variables. One is the consumer confidence. When people think there's a hope for a better future, that there would be livelihoods, their kids would get educated, they'll get jobs, so hope for a better future. And the second is more money in the hands of more people. So I think government has done a good thing when it comes to protecting people who are right at the bottom of pyramid, and absolutely right. As a country, as a government, you need to do that. The second is also to an extent give a lifeline to MSMEs, etc., so that they could survive the closure of the business activities during the peak period. But I think now we have come to a very critical juncture where the question is that how much should the interest rates be brought down to give an impetus to the economy? Second is how aggressive the government should be with the fiscal deficit. Clearly, with a point of view that there would be a glide path to bringing it down in the future, and in a very open, disciplined, and transparent manner, so that it gives confidence to both the investors as well as the rating agencies. Because the time will come when you will have to start looking at it from a lens that the cost of not doing or cost of less doing might exceed the cost of doing. And that we should not let it happen. We have to reach a stage where we get into what Rajnish was rightly explaining, a virtuous cycle of growth, where investments happen, or really it starts with demand. The demand goes up, investments happen, livelihood gets created, and then the virtuous cycle starts moving. So we have to get to that stage. You know, $3 trillion economy is like a A380 Airbus, and we should not let it go into a free fall. And we have to pick the joystick and pull the nose of the airplane up, northwards. I think that's what we as a country need to do.
Mr. Rajnish Kumar, right now, are we that $3 trillion economy like an A380 aircraft in a free fall?
So it will be requiring a lot of effort, as Sanjiv has mentioned, and normalization of supply chains. The demand side, one is, again, I'm coming back to the same point, that India has a serious infrastructure deficit. And there is a national infrastructure pipeline for 5 years. If we get it right and fund that infrastructure pipeline of 110 trillion rupees, which is almost $1.5 trillion over 5-year period, that itself can give the boost to the economy in a big way. Because we have to analyze sector by sector. What are the sectors which create jobs? And when jobs are created, they create demand. Still, there is a lot of dependence and what is called disguised employment in the agriculture sector. So it is very important that the construction sector, which is a large employer of the labor, how do we give a fillip to the construction activities and to build the required infrastructure? And what it does is, apart from creating the jobs, it does improve the overall productivity of the economy. Because infrastructure bottlenecks is one of the major issues when it comes to the export competitiveness of the country, or the high rates of the power, high rates for the land. So when we are having an economy where land, labor, power, so everything is costlier coupled with the infrastructure bottlenecks. So how does the economy become competitive as compared to the other countries? So apart from the fact that there is a disruption on account of the COVID, let us forget that there was no COVID. And then what will we do to improve the growth rate and the competitiveness of the Indian economy? So once we start viewing in that perspective, we will get all the right answers.
No, but Mr. Kumar,
and COVID-19 has to be
but I don't think you can look at it even like that, because the world will never be the same after COVID-19. If I could very humbly interject there, you also have the US Federal Reserve, which is coming out with one bazooka after another bazooka after another bazooka, and you have to be competitive in that environment. We talk, Mr. Mehta rightfully talked about, we still don't know what our fiscal glide path will be. We have no intimation from the government on that front. Should our interest rates be lower? Look what the US Federal Reserve, for example, is doing. We're going into the next Monetary Policy Committee not even knowing who the members are going to be.
No. One is that these comparisons to me, they are not valid comparisons. A $20 trillion economy with a per capita income of 60,000. How do you compare an economy which is less than 3 trillion and per capita income is less than $2,500? So the resources which a US government has, or a European Union member has, or Germany has, they are not the same. So one is, we should know that what we have and how do we make best use of it. US government can probably afford that in every account they will put $3,000. Indian government, they could have only afforded that they will put 500 rupees in Women Jandan account in 3 months, or they will give a 6,000 rupees credit to farmers over 12 months. And what also we have to realize, that you can put money in the accounts of the people, but can you prompt them to spend? What is happening? That whatever money even it has put in, so it has swelled my deposits. And the spending is yet to resume, because then here is a psychological factor about the COVID. So it is very important that this fear of COVID also, it needs to be removed from the minds of the people before they really start spending. So today, focus for everyone is on essentials. You have to spend, you invest. On the consumer drive, this is what is called the discretionary spending. In my view, it will take time. There would be certain sectors like, say, aviation, tourism, leisure, luxury goods. These are not going to come back or revive very soon. But if you have constructed road, if you have to construct a railway line, if you have to improve your railway stations, if you have to invest in renewable energy, so there is no psychological factor in this. So what you are talking about, that COVID-19, it has a impact on the mindset of the people. And on the consumer side, this is some time away. As I said, certain sectors, it is some time away. But there are certain sectors where you can push investment even if COVID is continuing for some more time. So that is the limited point I'm.
Okay, I take that point. And since you've brought up discretionary spend, consumerism again, it's a fantastic time to go back to Mr. Sanjiv Bajaj. Mr. Bajaj, like I was saying, Shraddh is over, Navratri is almost here, Dussehra, Diwali time. This is the busiest time for consumerism. This is when large and expensive ticket purchases are made. I don't expect you to have a crystal ball, but are you seeing any bounce back in demand leading up to the festive season at all? And if not, what can be done to create that demand? Because we've discussed the supply side. We need to talk about demand. And I understand we as a nation love saving. We have to spend if the economy is going to grow. What can we do to give demand a fillip in this scenario of fear and uncertainty?
First, Nayantara, yes, we are starting to see some uptick in demand. What extent? Time will tell us in the coming weeks and the coming months, especially as we get into our big festival seasons around the country. There is clearly some pent-up demand as well. There's also certain change in spend. So as you know, people are still not traveling. People are not buying clothes as much as they used to earlier. People are buying, for example, we saw right from April and May, dishwashers, vacuum cleaners, and washing machine sales increasing because you had all poor spouses like some of us who were sitting at home were told, get yourselves active. So we got some of these aids to help us. But it is equally important that what we are seeing with consumers is, since see, people at the lower end of the pyramid have gone through a terrible time and are going through a terrible time. Everybody else has actually saved a lot of money. There is a lot of worry on health. There's a worry, will my job stay? But you have saved on money, you've not spent. And we are starting to see some change in spending pattern, because you're not spending on certain classical things that you would normally spend on every month. So you start spending on some other stuff. But for us to get to regular spending, as Rajnish ji also said, on the consumer discretionary side, to get to the scale as earlier, it's going to take some time, because you're going to see three things. You have to see the economy improving, you have to see the health crisis reducing, and as a result of that, you have to see confidence coming back. Just by putting more people in, more money in people's hands, or just by enabling everything digitally, which is what I must say the industries, whether it is the producers, the financiers, the insurance companies, have done this really well in the last 4 months. It's unbelievable how much more as a country we have digitally enabled ourselves. But unless the consumer has confidence, he's not going to go out and spend like the earlier levels. So you will see an improvement, because every consumer segment is not hurting as much. So you will see improvement from the last few months. And I would strongly support again what has been said already, that this is a crisis which is not a typical economic crisis. It's a crisis which started as a health crisis. It is a crisis which came more on the supply side rather than the demand side. And we have to grow out of this crisis. We have to grow out
But
of this crisis.
through COVID-19, also be fearing another crisis that might start. And I want to get all your views on this. As we move towards digitization, are we not talking enough about the fact that we might be creating new retail delinquencies? There is hyper competition. You're having serious money from around the world, which is coming in over here. Everything is being consumed digitally. There are fintech companies that want to lend you anything from 100 rupees to 50 lakh rupees. I don't know if enough due diligence is being made. Mr. Bajaj, how serious is this fear, the rising retail delinquencies?
I don't think digitization and increased competition in itself gives rise to higher delinquencies.
No, but not
Poor
having
risk
enough checks and
practices,
balances. Not having
poor
enough
risk
checks and
practice,
balances.
no, poor risk practices does that. And in the last, again, 6 months, we have seen that a lot of startups who pushed for growth at the expense of building first a good risk evaluation system, a good collection system, have suffered. And one will learn from that. It's good to suffer when you're small, you learn from your failures and you build this up. The opportunity is so large. If the opportunity was not large, a Bajaj Finance would not have got created in the last 10, 12 years, when you had so many other banks and NBFCs. And yet, Bajaj Finance is only 1.5% of the banking system. So I would not worry about this at all. I think there is a significant opportunity. There are those companies that very clearly are looking to build their business over the next 20 years, 50 years. If there is somebody else wanting to do it in 3 years and try and get out, they could get into trouble. But that does not, in my sense, end up bringing the entire system down.
Okay. Mr. Mehta, if I could now come to you. You've heard what the other two gentlemen have said about creating demand. Mr. Bajaj, in fact, saying that, he doesn't think that just giving money to people is going to really help in sustaining the kind of demand that we need to see to become a $5 trillion Atmanirbhar economic powerhouse. What, according to you, is the right way then to create demand? Because that is missing clearly at the moment.
Yeah. This is a massive opportunity for a country. And this is an opportunity we should not let go waste. And if we just pause for a moment and reflect, what are we talking about? That, when India gained its independence, our coffers were empty. And the GDP of India at that stage, if you were to measure it at today's price, then it would be less than the market cap of Hindustan Unilever. So that's where the country started. And for the first 40 years, all of us know what the growth rate was. In the last 3 decades, we have achieved about 6.5% on an average GDP growth rate. And if we have to create 10 million jobs every year, then we have to cross the chasm between 6.5% and the 8 to 10% that the potential of the country is there. And then forget $5 trillion. In the next 12 to 15 years, we could be on the cusp of becoming a $10 trillion economy. Now, when you look at it from this lens, this first entails that you dream big, think big, and act big. Yeah. And I'll just pick up from where Rajnish ji left and talk about a few themes. I think first, we have to look after our people, protect our people. This is a fantastic opportunity for us to invest in the health infrastructure. Our health infrastructure, if we look at it on beds per 1,000, we are anywhere between 1/5 or 1/6 of the more developed nation. Yeah, so this is a great opportunity for us to do that. If you look at the pharma industry, it is about $41 billion, and we have about 3% share of the global pharma industry. This is again a great opportunity for us to start looking at how do we solve the problem of API and then start looking at about a $100 billion industry. The second very important business, the thrust should be on the agri side. At the end of the day, 60% of our countrymen live in rural India, and 50% of the people who are employed in the farm sector. But then there are certain fundamental issues. Yeah. If we look at it, 85% of the farmers, they work on farmland, which is less than 2 hectares. And while we may be a big country from land under cultivation, the total exports or a share of world trade of agri and horticulture is just about 2.5%. So how do we become a granary to the world? And I'm pleased with the government, the steps they have taken to reform some of the archaic laws that existed in the country. Yeah, they're absolutely in the right direction. And that is the kind of focus we need to bring in. The third important bit is technology as a game changer. Yeah, just like during the beginning of this millennium, when Y2K happened, it gave a massive fillip to the Indian IT industry. How do we digitize the entire economy? Yeah, this is again, the first and second industrial revolution, we were never able to take part in it because we were a part of a colony. The third, we were too poor to take benefit out of it. But this is a moment where for the size of the economy, we should make data our national asset while the whole country and move up several notches, whether it is precision manufacturing, whether it is modern agriculture, whether it is services, go up the value chain, whether it is governance, transparency, we could completely change. And last but not the least is manufacturing. India has just about 600 firms which have turnover of more than $500 million. Yeah, and the share of this firm on turnover in terms of the total GDP is about 30-35%. If you look at a peer group, it is in the vicinity of 60-65% or 70% for large companies. So this entails we have to reform the factors of production. We have to bring down a cost of capital by 300-400 bips at least. We have to bring down the cost of logistics by 400-500 bips. Make land available, reform labor. So these are massive opportunities staring at us. We were, if you look at the history of India, we undertook the reforms in 91 when we had a back to the wall. We were forced to do it. Now this is again a massive opportunity for us. We need to press the pedal, go with massive amount of hope and optimism, and work on each of this fundamental area.
So we have to make
Say
use of
that.
this opportunity. We have to focus on the opportunity that can come from this crisis. It's time for us to be ahead of the next revolution. I take all of are from old economy. Do you think the government should save the stimulus for the legacy economy, or should it focus for the new economy, or it has to do both?
See, it's never either or. Yeah, it is about and. There are some industries which are big employers, yeah, which have been seriously impacted. The question should be asked, how do you bail them out? What is important is that the government should not bail people or industries for the sins of the past. Yeah, if you have a balance sheet which was fractured even before COVID, don't use the crisis to get bailed out. That's not the job of the government. Yeah, but if you have been seriously impacted and you're a large employer, we should find ways and means of how do we give the industry a lifeline so that they start employing people again. And economy is not like a switch. It's not that you switch off the old economy and switch on the digital economy. It doesn't happen like that. Yeah, there would have to be investments made. I'll give you a classic example. Look at the retail trade. What has happened during the COVID times? Two channels have grown majestically. One is, of course, the e-commerce, albeit from a very small base. The second is the humble grocer because of proximity. So the challenge for the nation is, how do we ensure that a grocery trade, which has 10 million outlets, where 100 million people live on it to get their bread every day on the dining table, we make them survive and thrive? So the question is, how do we connect them? How do we digitize them? How do we bring the science of retailing to them? That is where the focus has to be. And that is how we will get the economy going. I think we have lost Nayantara.
Yeah.
So Rajnish, we can start, keep on with the conversation. Yeah, what do you think, Rajnish, as a country, yeah, converting this big challenge staring at us into a big opportunity?
No, that is what you rightly mentioned, that somehow we act when there is a crisis. So 91 was a fantastic period when country was pushed to the wall and great reforms were initiated. And what happens that the resistance to the reform that breaks up in the period like this. And that is where, and a lot of things you already mentioned, that opening up, say, mining, defense, then your agriculture reforms, which were long overdue. So those things have happened. And the as far as the technology digitization is concerned, the government's role is more of an enabler. They didn't have to, in fact, directly interfere, or in fact, the government, because they have always kept away from the IT industry, that's why it has flourished so much. So I think they should continue to adopt that history. But for building up the infrastructure in the country, I don't think that private sector alone can do it. And here the role of the government becomes very important.
Yeah.
Labor reforms also, new code is already there in the parliament.
But
Land
Kumar,
is something.
if I could
Land,
interject there, if the government
yeah.
has to stay away, can I ask you? It can't stay away from banking. Let's take your sector at large, right? It's never going to happen. The government or the Reserve Bank of India, during a crisis, it has to make sure that banks give a lifeline, whether now it is going to be on a moratorium, which I don't know what's going to happen to the interest and the interest, or it is a one-time restructuring, which the government itself was so keen on at a time when some of the largest financial institutions in the world today, the top 20, are not even banks. So I want to also ask you that during this crisis, when everyone's adapting, what is going to be the future of a bank? What is a bank going to look like in the post-COVID era?
So banks, again, I'm saying that it's not about COVID. In any case, a profound shift is happening in the financial system across the world. COVID has just hastened that process, and the pace of digitization has gone up. That is what the COVID impact is. But otherwise, also, the future of a bank or how the banking or financial system would look like, in any case, it would have been very, very different, because there are certain things where its time has arrived and you can't do anything about it. So, in a world today, if you are not investing as a bank or a financial service provider heavily in the digitization of your processes, so you will become extinct. There's no future for anyone who is not tech savvy or digital savvy. And digital means what Sanjiv was talking about is your capability to analyze the data for providing, number one, newer products and services, your underwriting, your risk management, everything, and at the same time, the customer convenience. So now we are seeing a trend that people, in any case, were not coming to the branches. For State Bank of India, 7 out of 100 transactions only happen at the branches. And that trend is going to continue. But the capability to deliver digitally, which a bank like State Bank has created, or Bajaj Finserv has created. So this is the new trend, and ultimately banking, the way we are imagining at SBI is that it will be a big digital platform, and branches will be just the nodes to provide the physical interface, rather than the earlier model where branch was in the forefront of the business and the technology was at the back end. Now there is a complete reversal. The technology and digitization is at the center, and you have to reimagine banking and financial system where branches or physical presence will be just for some sort of a contact point or a sales or a after sales service, and origination of business, handling of business, underwriting of the loans, everything is going to happen in a contactless manner. And that is where the entire ecosystem is moving. And in my view, we are moving in the right direction. And when we talk about the fintechs or the new lenders, there's a huge market which is still relying on the informal borrowings, and which are very costly. Sometimes it is not uncommon that a person with a low income base would go to the money lenders and borrow money at 30% or 36%. It's not calculated annually. It is called the return my money after 1 week, and on 100 rupees you will pay me 110 rupees. So calculate the annualized cost and you will know what is the cost of that borrowing. So that is where the fintechs, or as Sanjeev gave his own example, so they are filling in that gap.
Sanjiv Bajaj, what is the future of NBFCs? You know, you just heard the governor, Shaktikanta Das, say very recently as well that, you know, it's still vulnerable, 100 are being monitored, we can't have another failure. At the same time, you know, there's been this blot on shadow banks, on a couple of shadow banks after INFS, but I'm sure you would argue you are the future. So how will you do that? By embracing technology. And after you've just heard the chairman of India's largest bank talking about the reduction in transactions at the physical branches, that's going to be very crucial to watch out for going forward and as we beat COVID.
So let me start by saying that the chairman of the biggest bank has a board behind him which says SBI and also says YONO by SBI.
YONO, yes, I'm watching that.
What you are going to see of incumbents, of the smarter incumbents, these are going to become the fintech companies of the future, not the new fintech companies. It doesn't mean a few of the new fintech companies will not make it. But please keep in mind, lending is a leverage business. In private equity, you can fund 10 companies, 8 go bust to make 100 times return, and you make return on your fund. But if you leverage that 8 or 9 times with debt, on debt, you don't get the 100 times return. You only get your interest back. So a lending business through the new so-called fintech route cannot follow the same dynamics as other typical private equity businesses, because if you lose your debt on 8 cases, on 2 cases you can never recover it. So, so it's a fallacy to think that you know, fintechs are going to take over incumbents. But it does not mean that incumbents should just sit on their backsides and do nothing just because they have a protective regulatory environment. And if the largest bank, a public sector bank in the country, can become digital in less than a decade, and they don't talk about it as much, so people don't realize it's, you know, it's always more glamorous to talk about the fintechs. We don't know the change that is being driven. The same is true for NBFCs. Why is everybody worried about NBFCs? Because in the last decade and a half, they have now come to a particular size where they matter, where if they fail, it can cause systemic risk to the lending system. And that is why you need greater regulations around them. But you also need to realize that these large NBFCs have, over the last decade and a half, created a position for themselves, help expand credit in this country, done many of the things more innovatively, understand risk in a number of areas, from rural lending to gold lending to lending against for used commercial vehicles, and have built new models which are going to support this country as the country grows. So they need to be supported as well, whether it's with liquidity. Every time we've seen a crisis in the last 4 years, from your DMON to ILFS to DHFL and COVID, why do NBFC stocks fall by half? Why does credit get squeezed? Because investors believe they will not have access to strong liquidity lines from RBI the way banks have. Why shouldn't large NBFCs have that? And if it comes with a certain security, so you have to be willing to provide that security. So I think the time is gone really to think about NBFC and bank. The time is to say that there are a set of lenders. How can we use this to leverage ourselves to the 8 to 10% growth for the next 30 years that Sanjiv was talking about, that we need to take our country onto a completely different platform? How do we leverage Atmanirbhar India without having a number of strong lenders? I would say let a million flowers bloom. I would like to see 2 to 3 new banks a year for the next 5 years, for the next 10 years.
And I'm sure we're not having to reduce your equity or to create the ring fences for licenses, but that's a totally different debate. But Mr. Bajaj, you know, when you're talking about all of this, I'm going to ask a question which I'm playing devil's advocate here. I hope you'll allow me to ask it. It'll make me unpopular with you maybe for asking it. Why is it that when we talk about becoming Atmanirbhar, pump priming, growing the economy, we always look to the government for funding, for liquidity, for policy intervention? Isn't it also time that corporate India also rises to the occasion? You can't have a situation where the losses are to be funded by the government and by the taxpayers, but the profits and the bottom line is to only be enjoyed by the company and its shareholders. Don't we need, would you admit that we need a change in mindset on that front as well? Because you didn't see the kind of capex increase after, for example, the corporate tax rate cut.
So for example, let's not talk about a few crony capitalists with a few crony bankers and a few crony politicians. Let's talk about the fact that 95% of all of them are good and wanting to build a good economy. As Sanjiv Mehta already said earlier, any benefit, any support given today cannot be for the sins of the past. It has to be for businesses that were genuinely doing well, but that have been caught in this COVID trap. And when you're in that hole, there is only one person that can print money, and that is the government. And that is where that's the expectation from the government. But that expectation is not to create a protectionist regime. Atmanirbhar India should not be about protection. Atmanirbhar India is about India becoming the second factory to the world. And that's an opportunity which we all know, because of a number of global issues, political issues connected to China, that has come to us. But let's be clear, the Vietnams and the Philippines of the world have already started acting on this. If we only keep talking and not acting, we will lose. We will miss that opportunity. And in the next 10 years, we have to ask ourselves, where will 500 million Indians who will be young in their 20s and 30s waiting, looking for jobs, get their jobs from? So it's not only the opportunity and the luxury of growth, it is a responsibility and a huge need that comes upon us.
Absolutely. And so far, Atmanirbhar, what we have seen is increased tariffs, import duties, licensing regime perhaps making a comeback because of also the geopolitical tensions. Sanjiv Mehta, we're running out of time. So I do want to get your one views, because another problem that could come, and we need to talk about it and address it, is the ugly head of inflation, something that you do see always attached with a crisis. It has started happening. You are very familiar with it, whether it's palm oil or whether it is tea. Now the market is also getting more competitive. Giants will not be able to pass on the price to consumers. It's a cyclical problem. I see that. But are we addressing it? And should it only be addressed by monetary policy, not by supply?
One is we have to understand that where is the inflation coming from? If you look at the inflation on tea, it's clearly supply-led, because during the COVID days, we were not able to pluck the tea leaves. And I don't think next year you are going to have the same kind of rates in tea. If you look at the global commodity markets, it's rather a benign commodity market today. Look at the oil prices. In fact, the question that I have, that as far as the Monetary Policy Committee is concerned, their remit should move not just on inflation, but also on growth. Yeah, that is the critical discussion we need to have in the country. That's the remit we need to give to them. Because if you're just controlling the inflation, but you're not able to propel growth, that's not going to serve the cause of the country.
Yeah.
So I would rather, we have got two esteemed bankers over here. I would rather look at it being more aggressive on interest rates to propel the investments in the country. And that would kickstart the investment cycle. Because if you look at it, you compare yourself with the peer group. If your cost of capital is 500 to 600 bips higher, you're not going to be able to compete with them.
Absolutely.
And when Mr. Modi talks about Atmanirbhar, he doesn't just talk about self-reliant. Mr. Modi says India needs to have a bigger share of the global trade. So I think some of this big risk, there are risks attached to it. Yeah, but we will have to take those risks as a country and as businesses.
So you got 2 minutes, 27 seconds left. We'll divide that between the two bankers. So you both have to do that. Mr. Kumar, you go first. A drastic interest rate cut is now warranted?
Very difficult question to answer, that whether a drastic interest rate cut will really spur the growth. So again, I have a view on this, which may be contrarian, because whatever cut has happened, we have not seen that it has spurred the investment so far. So whether a further cut will spur the growth, but definitely the cost of capital.
But Mr. Kumar, Sara pass on bhi to nahi kiya hai.
नहीं बिल्कुल किया है. We have the statistics to prove that how much we have passed on. And again, these are all presumptions and not based on facts. These are all media creations.
Lag to hai, wo fact. Let Mr. Bajaj come in. Mr. Bajaj.
Anyway, just 1 second. Only about the inflation, I fully agree that this time it is the supply side inflation because of the supply chain disruption. Right now, the demand is muted, discretionary spend is muted. So we have to do everything to keep our supply chains in order and keep them up and running. Inflation will come under control.
Mr. Bajaj, you agree with Mr. Kumar, or you think that we perhaps, so you agree with Mr. Mehta that maybe we do need to see some drastic action on rate cuts?
You need to see this in two steps. One, we've already seen 120 bips of rate cuts since COVID. So, for example, the better NBFCs like ourselves are seeing record lows at which we're able to raise money. And as we start, and we've started lending already, we will see the benefits of that trickling down. We have to know that RBI's central role is to control inflation. And I also believe that most of this is supply-led, which means in the coming months, inflation should start going down. As that happens, there can be an opportunity then to cut rates. And I agree with Sanjiv that we need to shake up the economy. So even if we want to do that for a short period of time, it will help us grow. But no one lever is enough. So you have to also do it at the right time. Otherwise, it's like the silver bullet. You waste it, you get only one bullet. So we have now one bullet left. The timing of that is very important. And for us to one thing, the big focus on infra that Rajnish ji talked about, I think is imperative for a country like ours. And it will give us 10 years, 20 years of growth.
Okay. I think we are out of time. I had seen a timer. I did want to ask Mr. Mehta that, so far when you talk about the only bullet, we've only seen reactions so far ke chote pouches rural India ke liye, value packs for urban India. So if you're going to see anything.
No, often people say that why the government has not spent money on demand stimulus. I think we have to also understand that in one aspect, they've kept the powder dry, because it's going to be a marathon, not a sprint. The crisis is not getting over very soon.
No.
Second is, you can't have a demand stimulus when there was supply side constraints. When the country was under a lockdown, you can't give money to people, because rather than spending, they would save money. I think now with the festive season coming, where the people's mood also changes, it might be the right time to press the levers to get the demand going, which in turn would kickstart investments, and then we look aggressively at our $10 trillion vision.
Okay, with that note of optimism ahead of the festive season, I'd like to thank all three of you, the giants of India Inc., the stars of India Inc., for being so candid and for this session.
Thank you.
Thank you.
Pleasure.